Hi everyone, let's go over my medium time frame and low time frame bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the medium time frame bearish scenario where we still expect a move to the downside in a wave C and then an expanding flat, which is a 3-3, and then an impulsive 5-wave move to the downside where the most common target for wave C is between the two 1.618s, which is between 23.4k and 22k. In this scenario, wave B by itself is also an expanding flat, being a 3-3-5 wave move to the upside where the high of B then has to be this high over here, as you now expect an impulse to the downside. So this being the high of wave B cannot happen because you then expect a 1, 2, 3, and wave 2 is not allowed to take the high of wave 1, which is what happened here. So because wave B has to end here and therefore wave 5 in this being an expanding flat, it means that this wave 4 is incredibly long in time compared to wave 2 and compared to wave 3. As you can read over here, it is 11 times longer than wave 2 and 4 times longer than wave 3, which is incredibly rare. It is a very long wave 4, and that is something you don't really usually want to see. If we look at the medium time frame bullish scenario, then the low is already in and we are going to be looking for price to move towards the upside. In this scenario, this is wave A or wave 1, and the range over here is then already finished. The correction is finished, wave 2 or B is in, and we are going to be looking for a move towards the upside. You can see that price has been bouncing on the 0.236, which is a very rare Fibonacci target taken from the low to the high of A or 1 for both a wave 2 as well as a wave B. However, time-wise, being the low over here is actually quite nice, around the 3 Fib time, taken from the low to the high of A or 1. If you look at the medium time frame, also another bullish scenario, then this is the high of wave 1 or A, and we're looking at a 3-wave structure to the downside in either an ABC, where C is then a 5-wave move, right? So you want to see 5-wave move to the downside, or a wave Y in a WXY, when we are then looking for a 3-wave structure to the downside. Now, compared to the other bullish scenario, and that's why I show it, the Fibonacci's here are good because a 3A2 is a common target for a B, bit more rare for a wave 2, but the 0.5 is a common target for both the 2 and the wave B. But time-wise, this would mean that the correction is a lot longer, going more towards the 4 or the 5 Fib time, which is more rare. So it's either or, we can't have both at the moment. If we look at the volume profile of this very big range, I at least want to show you this. I noticed that the point of control moved towards the upside. Previously it was over here, now it moved to the upside, and you can see that actually in the last week we backtested the point of control before a strong move to the downside more locally. Now if we think about volume profile trading, the moment you backtest a point of control like this, you have to keep into account that price could go all the way to the value area low, which is sitting at 27k. So this is a very important target for the Bitcoin price. Of course, before we get there, there's a couple of other supports that we have. We have over here a support around 29k. We have a support around 28k, and for the bullish scenario over here with the 302 and the 05, these are going to be very important support structures. But if we look at the volume profile, then this is definitely a level to keep in mind. You can put this one on your chart as well. It's basically from the beginning, the 13th of March to where we are now, and you can see the point of control nicely respected. If price would move towards the upside, then the value area high is a level to keep in mind at 31.2k, which is also in confluence with the resistance area that we have between 31.1 and 31.3k. If we go towards the lower time frames and I switch to the 2-hour, then what you can see over here is an impulsive structure to the downside. So in this scenario, we are looking at this move to the downside over here as a wave 1 or a wave A, followed then by a wave 2 or B that is already finished, and then we're going to be looking for a bigger wave 3 towards the downside. Now the 3A2 is a rare target again for a wave 2, common for a wave B, so that is something to keep in mind for a potential ABC if price already wants to move down. But if it wants to move down, we then have a second wave 1 over here. And what you actually like to see in a potential 1-2, 1-2 scenario for then a bigger 3 down is that the second wave 1 takes the low of the first wave 1. But clearly that is not the case, as you can see. So preferably you have a 1-2, 1-2 and then a bigger 3, where the second one takes the low of the first one. So this is something that kind of goes against the most common double 1-2 scenarios, but nonetheless, we have to at least think about this scenario, where this is then the wave 2 target area between the 0.5 and the 0.786 is the most common target area for a potential wave 2, and then a 1, 2 or an A, B, and then eventually looking for more downside in a wave C. Time-wise, the high over here is a bit more rare because it has been made before the 382 fib time, taken from the high to the low of 1 or wave A, which is quite uncommon. Usually corrections tend to finish before or after the 382, so somewhere over here, but not before. So this is relatively rare, but something to keep in mind for sure, especially if price is going to move towards the downside impulsively. This is then the high of a 2 or B, and we also of course had an impulsive move here, so again this could be a wave 1. In another bearish scenario, we expect price to first move to the downside. So we then have over here the high or the low of a wave A, then inside a wave B, we're looking for an expanding flat A, B, C, before then a move towards the downside in another wave C. So we're then looking for a zigzag 5, 3, 5 structure, where this area over here is important for potentially an ABC expanding flat. Now the support area over here, most common target for a wave B in white, taken from the low to the high of A, is between the 1.236 and the 1.38, sitting between 29.3k and 29.1k, which is actually just above a support area that we have, which is around 29k. So that is actually not the greatest. So if price moves down, the probabilities might be higher for price to at least move to the 29k area, but that means that this is the rare target of a wave B, being the 1.618, and that is something we have to keep into account. So price moving down, hitting this area might actually lower the probabilities for this particular scenario. And if we look at the bullish scenario, then, well, the low is in and we're going to move towards the upside. So this is then the low, this is then a 1 or A, followed by a 2 or B, and we're going to be looking for either a wave 3 or a wave C. What is more bullish though, is if price is going to take this high first before taking this low. So if price would move to the upside, it proves that this move to the downside was a wave C. And if this is a wave C, we have to think about a corrective structure like this, where this is then a first move up and then has to be a potential wave 1 or A, followed by a corrective 2 or B in an expanding flat, for then a 3 or C towards the upside. So then price has to move towards the upside over here and take this high first. If we look at the CVD more locally and go towards the lower time frames, then over here you see we did have bullish CVD divergences over here that already played out. Price moved to the upside, hit the target of the bullish CVD divergences very nicely, and now this one is finished. Now more locally, we can see that price again made some bullish CVD divergences. I'll show it on the chart in a second. However, we are countered over here by some bearish CVD divergences that just now played out as well. So if we look at the AGGR chart, then you can see higher low in price, but on the blue line, lower low on the CVD. But if we then look at yellow, you can clearly see lower high on price, but a higher high on the CVD, which is a bearish CVD divergence. And a bearish CVD divergence has just now played out as well. So that one is neutralized, and we have potentially the bullish one left. So we have to wait and see what price is going to do. Maybe some volume coming in over here at the moment, so patience will be rewarded. There is at least a little bit of support in this area. If I open my target boxes, we just hit the first target area over here for a bit of support, sitting around 29.8k basically, and just below there we have a daily and the current weekly point of control in this support area, being between 29.8k and 29.9k as well. So, well, you can see the prices over here, right? If we then finally look at the probabilities of the different scenarios on the time frames, then on the medium time frame, I'd still be expecting a move to the upside, probably not this bullish scenario, but preferably seeing another move to the downside to the more common Fibonacci targets, before then a continuation to the upside. And on the lower time frames, the probabilities are at the moment a bit higher for price to first take this low, before then later maybe potentially take this high, but to first take this low at the moment before going up for that high. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use, in my opinion, opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.